Hey everybody, hope this finds you doing well. This is Danelle here at Networkchain. Today we're going to talk about some of the major news stories over the past week and the overall landscape for the cryptocurrency market. As usual, let's go ahead and go with the cryptocurrency market update. You can see Bitcoin at the time of recording is currently trading at around $84,000. It's basically flat over the last week. It actually went up a little bit after the comments by the Federal Reserve Chairman Jerome Powell, and then it started to come back down to where it was earlier in the week. So now you can see that it's basically flat over the last 7 days. Ethereum is down, or I should say it's up 2%. It's still under $2,000. It still hasn't broken over that mark in a little while. And we see that XRP is down 1.6%, Solana down 5% over the past week, Dogecoin also down 5%, Cardano down 6.72%, Tron up 6.97%, and Chainlink rounding out the top 11, up just over 1.5%. So we can see here that truflation, we've gone over this chart before, but basically it looks into all of the goods and services as well as other core metrics when looking at inflation. So truflation is supposedly supposed to be a measure of the actual inflation that you and I see in the United States. And so you can see here that obviously inflation was extremely high in 2021 going into 2022, and that's the reason why the Federal Reserve decided to start to hike interest rates, because previous to 2022 interest rates were at near zero, some of the lowest rates we've ever seen when it comes to how much money or how much it would take to borrow US dollars, and it was basically nothing. And now we saw over the last several years that the interest rates were hiked, and it went along with inflation to combat inflation. So now that we see that inflation is now coming down to that 2% level, which is where the Federal Reserve said they would like to see it before they decided to start cutting rates again, because a lot of people want to be able to have money to invest in various products and services to advance their companies, as well as people like me and you want to borrow money to be able to buy homes and cars and things of that nature. So it's nice to have a lower interest rate, and so that is what the Federal Reserve is in charge of. But they have certain metrics that they look into in determining whether or not they should raise interest rates, and inflation is definitely one of those metrics, including also unemployment and the growth of the United States, which is GDP numbers of gross domestic product and things of that nature, that measures the growth of the economy over a certain time frame. So if we look here, we can see this is the effective fund rate, and we can see that back in 2020, you can see that it was basically 1% or less in that time frame, 2020, 2021, and then they started raising these interest rates in January of 2022, and you can see that if you look at any of the major asset charts when it comes to the S&P 500, when it comes to Bitcoin, that's when you saw a major downturn in stocks and cryptocurrency when this interest rate continued to go up. So you can see basically all of 2022, 2023, the interest rates went up all the way upwards of over 5%. And now we're at that 4.25 to 4.5% interest rate. So people are looking forward and have been really listening and waiting to hear from what Jerome Powell has to say, because they want to get any indication that they will continue to lower the rates. And if that's the case, then when interest rates start to go down, that also affects how much money you make having money in your savings accounts, for example. So when the interest rates go down, you're no longer getting 2%, 3%, 4% for like holding your money in a CD or in a savings account, for example. Those rates begin to go down. So when that happens, people are more willing to then move that money into more riskier assets like the stock market and cryptocurrency, because they're going to have returns that are higher than the amount that they would get just from having their money parked in a savings account, for example, where you can get anywhere from 1% to 3%. So this is part of what you want to look at and consider when you're thinking about investing into not only cryptocurrencies, but also into stocks and other risk on assets, because there is a correlation when it comes to federal interest rates, when it comes to the economy, when it comes to inflation. So it's definitely something that you want to make sure that you have an understanding of before you begin investing. So when we look at the Bitcoin ETF flows, we can see that over the last couple of months, because we have uncertainty with the United States administration, they have been signaling that they will be placing tariffs on certain imports coming into the United States. And so with that, there could be inflation or higher inflation, because the cost of certain goods that come from countries around the world are going to be a lot more expensive, because the United States is placing a tariff on those goods that would be coming into the United States. So we can see during that time when these announcements were made, we saw that the S&P 500, we saw cryptocurrencies start to go down, because there's a lot of uncertainty as to what is going to be the future when it comes to the economy. As we mentioned, the Federal Reserve looks at metrics like inflation, and so if inflation goes back to being out of control, where it goes above 3% or more, then most likely the Federal Reserve will not cut at all, or potentially could hike rates again if inflation goes out of control like it did back in several years ago. So we definitely want to keep an eye on what's going on with the tariff situation, as well as what's going on in the overall economy. So it's definitely something that you want to make sure that you stay tuned to when it comes to making your investment decisions. So we can see here the Bitcoin ETF flows. There was a ton of flows that came out. You can see a negative $1 billion worth that came out of the Bitcoin ETFs the last week in February. And we see over the last several weeks that we still have had some general up and down days. We're back to the upward trajectory in terms of the inflows that are coming into the ETFs, but obviously this is something that continues to vacillate over time. But we definitely had a large outflow towards the end of February, so we'll be looking to see if the Bitcoin ETFs will continue to see more inflows over these next several months, depending on what happens in the overall economy. We can see here, if we go to Bitcoin treasuries, we can see that iShares, IBIT, you can see that it still has over 570,000 Bitcoin, and Fidelity coming in at number 2 with just under 200,000, and Grayscale rounding out the top 3 with 195,000. So these ETFs still have cumulatively over 1 million Bitcoin in their trove. So definitely we'll keep an eye out on that, because it definitely is an indicator of how investors, not only institutional investors, but as well as retail investors, how much risk are they willing to put out there, and how much money are they willing to put to risk, because cryptocurrency is definitely still considered a risk on asset. Given what's going on in the overall economy, it'll be an indication as what's going on when you see these major inflows and outflows coming into the ETFs. So another major story that came out over the past week, not only did Jerome Powell speak, and he basically intimated that there could be 1 or 2 cuts later on this year, but it still remains to be seen. They're going to continue to look at those metrics that we discussed. Obviously, they also want to see what happens with the tariff situation, so that will determine whether or not they will cut rates later on in the year. But initially, the global markets looked at what he was saying as a positive sign. So the market did go up a little bit, but as I mentioned earlier, Bitcoin did start to come back down towards the levels that it was about a week ago. One of the other major news stories that came out is that the SEC, the Security and Exchange Commission, they said that crypto mining doesn't violate securities laws. So that means that they don't have to have some of the disclosure requirements that other securities may have, and so that actually is helpful for a lot of people who are in the Bitcoin space, particularly in mining, because it does clarify some of the rules when it comes to reporting what's happening with mining operations. So in its latest guidance to clarify rules for the fast-moving industry, the regulator said that mining operations do not need to register their actions, as they do not involve the offer and sale of securities. And the Securities and Exchange Commission, they regulate securities, and so the U.S. has also determined that Bitcoin is not a security, is considered a commodity. So we still are in the early stages and coming up with clear regulation and legislation when it comes to being able to define various cryptocurrencies, because maybe some will be considered commodities, maybe some will be considered securities. So there's another agency that regulates commodities, the CFTC, and then you have the SEC, which regulates securities. But we can't just enforce by or try to enforce just by not having actual clear laws, and that's what the SEC was seemingly doing with the last administration. So I'll be curious to see what happens over the future in determining whether or not a cryptocurrency is going to be considered a security or whether or not it will be considered a commodity. So one last mention before we get out of here. Another major story is that MicroStrategy, Shock, is looking to buy more Bitcoin. They raised over $700 million to buy more Bitcoin in their STRF perpetual offering. So this is another perpetual, or I should say it's another version of a preferred stock. So they have Strike, STRK. Now they have STRF, which is another preferred stock offering. And basically these preferred stocks, for people who buy them, have a dividend that they will receive per year for holding the stock, but then also they have an opportunity to convert that stock at a later date. So there's different stipulations with regards to how one can invest and use these preferred stocks, but it definitely is a way that Strategy has found to be able to raise more money to buy additional Bitcoin. As we know, they have nearly 500,000 Bitcoin. They're very close to that mark, and so they are definitely continuing on their journey to continue to add as much Bitcoin to their stash as possible. So they're stacking Satoshis. So we're stacking Satoshis. We definitely want to make sure that we keep you posted on all the major news in the cryptocurrency market, as well as just general learnings when it comes to investing in this burgeoning asset class. We always appreciate your comments and your love. Thank you so much for watching. We will be here again next week as usual. You can check us out on X as well as IG. We look forward to linking up with you soon on the network chain. In the meantime, take care. Bye-bye.